curiously forecast in financial markets, even those based on the most fundamental data, can fail under the influence of a sudden news. Oftentimes, these are political events, sometimes natural disasters or unexpected decisions. In the case of the Japanese yen, all these factors emerged at once, thus acting against its strengthening. The single European currency is also licking its wounds after the victory of the French far-right party in the parliamentary elections. Only the US dollar is destined to grow under any circumstances. At least the greenback is asserting its strength against the yen, that's for sure. Considering that the Bank of Japan kept the rate at 0.1% at its meeting today, the yen again risks testing its multi-year lows. Indeed, the Fed Reserve is keeping its funds rate at 5.5%. Interestingly, Japan's central bank gave a weak hawkish signal. Policymakers said that they would discuss a decision on a possible reduction in the huge purchases of government bonds at the next meeting. That's in July. Returning to plans and forecasts, let me remind you that the Fed Reserve announced 7 rate cuts at the end of the previous year, but now the forecast has been downgraded to 1 rate cut. At the same time, Japan was anticipating economic growth, but the New Year's earthquake broke out. It was mainly the US dollar that benefited from its aftermath. The greenback won favor as a safe haven currency and as an asset backed by a strong economy. In addition, its strengthening reflects the growing difference between the yield on the US Treasuries and the yield on the bonds of other major economies. Today, the greenback is at its best again. Its index relative to the 6 main peers rose to a 5-week high of 105.50 and was trading in the corridor of 105.10 to 105.70 in the first half of the day. Even weak economic reports did not prevent the US dollar from growing. For example, US factory prices fell to minus 0.2% in May from a month ago. In April, the PPI jumped by 0.5%, much stronger than the estimated 0.1% uptick. All in all, the PPI went down immediately by 0.7% in May. At the same time, the number of Americans applying for unemployment benefits for the first time increased last week. Thus, the markets received signals about a decline in economic growth and employment levels. But these are only isolated reports, and in any case, they could not significantly influence Wall Street or forex. However, the S&P 500 and Nasdaq updated their record highs yesterday. Moreover, the uptrend has been going on for the first session in a row. The US stock market is likely to close also higher today. The benchmark index, the S&P 500, traded higher at the start of the trading day in the intraday corridor of 5,402 to 5,442 points. At the same time, the main factor influencing the currency market today remains the euro's weakness, and the euro is on the track for the weekly 1% fall against the US dollar. And today, the euro-dollar may note the sharpest drop in 2 months. The Eurozone's industrial production accelerated its fall from a minus 1.2 to minus 3% in annual terms, worse than expected. Under the pressure of extremely weak data, the single European currency quickly pulled back to the levels at which it was trading before the publication of inflation data in the United States. This pullback in the euro is logical, despite the growing confidence that the US Fed will cut interest rates before the end of this year. The difference in interest rates between the EU and the US is valid. The US dollar is already benefiting from this disparity. It will continue to work in favor of the dollar. Besides, the state of affairs in the euro area's economy is much worse than the economy on the other side of the Atlantic Ocean. So, this fact factors will inevitably put pressure on the single European currency, contributing to its long-term weakening. Therefore, today the euro-dollar pair not only pulled back below 1.08 but immediately fell to the lowest level in a week. This sharp decline indicates the advantage of the peers among market participants. At the same time, this advantage can cause short positions to overheat, allowing an upward retracement. After the one-week low is updated, selling activity will intensify, so the peers may bring the euro to a new bottom below the level of 1.07. Today, commodities also have come under the pressure of the firm US dollar. Despite growing crude oil inventories in the US, oil prices are trading lower today at around $82 and $83 per barrel. The moderate decline in the Brent price is largely due to the growing market confidence that the Fed Reserve will begin to soften its monetary policy before the end of this year. Brent oil futures are moving at the peak of an upward cycle that developed at the beginning of the last week. The Brent price has already gained 7%, and this recent rise in oil prices hits Saudi Arabia and the Russian Federation, and this means that the major of oil suppliers will not take any measures to stabilize the market. In other words, oil prices are still in a state of some equilibrium. The only question is how long this situation will persist. Most likely nothing will change today, but next week some changes are possible. For example, under the influence of the Bank of England, which is expected to cut the policy rate, this way it will give another dovish signal to the US Central Bank, after which oil will strengthen its position. You have watched a review of the global financial markets for today, June 14. Keep close tabs on the global markets on the InstaForex TV channel. Feel free to leave your comments. Our experts are always ready to answer all your questions. Thank you for watching and see you online on a Monday.